Hey everyone, PSK2329 here. I wanted to do a quick video on today's recap on my trade on Amazon, as well as just kind of talk about the market and why I had so much conviction when it came to this trade. So first of all, let's start off with time, effort, studying. There is no substitute, there's no shortcut for time. You cannot shortcut your way in this game. There's nothing given to you, nothing is promised. It just comes from a ton of hard work. And the number one thing I've focused on in the past few months is my charting. I've worked every night, hours upon hours, working on my charting to better understand charts, to better understand support and resistance, work on some channels, some Fibonacci's, things like that, just so I can get a better understanding of where I can see the market going to, and that way I can predict where I want to sell, where I want to add, where I want to buy, where I want to exit. Things like that will help you be a better trader. And the number one thing you see with a pro is they can look at a chart, recognize a chart pattern, and then understand where it's going to go and where to get in, where to get out. That is what will make the difference in your trading, in my opinion. So why did I have so much conviction on Amazon? Well, a couple things. So this is the chart you're looking at. So this is kind of the 6-month view, and this red candle right here, this is Monday, so the beginning of the week, 10-1 basically. And as you can see, it's a red candle, and it's mainly at the top of a channel or a top of a push, and you can see I have my channel lines going here, and it's getting more towards the top of the channel. But the other thing is, I try to develop a story or try to build my thesis, and it's not just based on one thing, it's based on multiple things. And the more and more things I can put together in my thesis that tell me the story, the stronger my story is. So if I only have one piece of information, to me that's kind of a weak story. But if I have 10 things of information telling me the exact same thing, that is a strong story. So what am I looking at? So I'm looking at a red kind of bearish candle, kind of, it's not really a gravestone, but it's more of an inverted hammer. If you study candle charts at all, you'll understand what all these mean. And you can kind of see that it's at the top of a run. And it's also getting close to the top of this channel. It's getting close to all-time highs. Anytime you get close to all-time highs, you need to anticipate a pullback, whether it just breaks through and then pulls back. But very rarely does a stock test all-time highs, like you can see here, and just bust through and keep going. More than likely, it's going to break through all-time highs and come back. It doesn't matter if it's intraday, it doesn't matter if it's on a daily, weekly chart. So I was kind of building a thesis, and I'm looking at the MACD, and I have my MACD lines right on top of each other, right around the convergence line. And so this is telling me that the sentiment in the bull bears is kind of neutral on the chart right now as of Monday. And then if you start scrolling through the week as the day goes on, here's Tuesday. Okay, so now we're breaking the uptrend. We're now starting a downtrend. My MACD is now starting to cross over, so I'm building my thesis. So that's Tuesday. Wednesday, we have another big day. So now we're definitely in a confirmed downtrend. My MACD is now crossed over. So not only do I have 3 red candles, but I have a downtrend and a MACD crossover. So that's 3 things in my thesis. Plus I have volume. So there's the 4th thing in my thesis. Plus I have market sentiment. So now it's 5th thing in my thesis. Plus I have interest rates, 6th thing in my thesis. So you can kind of see how I'm building a case to say, okay, is the market bearish? Is it bullish? Are we due for a pullback? Are we due to bust out to new highs? Are we set to do a reversal? Sentiment is neutral. So that's the 7th thing. It went from extremely bullish to neutral. So now everybody's got a little bit of fear. Maybe the bulls have cooled down a little bit. So I'm just building this thesis. Plus we're heading back to the channel. and I'm thinking we're going to come back and test the bottom part of that channel. So there's the 8th thing. Now on Thursday, we bust through the channel. Not only that, this is the 50 moving average. So now we've tested the moving average and actually broke through it during that day. My MACD is now pointing down. All my EMAs on my chart are pointing down. Then I go to my weekly chart. My weekly chart is starting to curl, and I see this huge bullish or this bearish engulfing candle on my weekly chart. That's bearish. I have my MACD on my weekly chart curling down. That's bearish. Same with my monthly. The monthly, the MACD is starting to curl. You know, everything's starting to slow down. So all of these things in my thesis are telling me Amazon is starting to curl to the downside. It is looking weak. It is not ready to bust out to all-time highs. So now we come into Friday after we've broke through the 50 EMA. I'm thinking, okay, we broke through, and it was looking weak all day. There was no big real rebound. The candles don't tell me this is ready to go. None of my signals are telling me this is ready to go. I'm thinking if the job numbers come out either flat or low, we're going to have a sell-off. The sell-off is going to continue. The only way the market was really going to rebound was if the job numbers absolutely blew it out of the water. And even then, I wasn't convinced that it would last all day. Because when I started flipping through charts, especially when you started going through all the FANG names, they were all looking extremely weak. Everything was starting to roll over. So it told me that even if the job numbers were great, chances are we might just have a morning rally and an afternoon sell-off, because everything was pointing against us. We had treasury yields, interest rates going up. We had sentiment in the market cooling down. You have cycles in the market turning over. October is actually the biggest month for volatility of the year. That's when you have leaps rolling over. You have you have options, you have hedge funds, you have all of these different things converging at the same time. You have sentiment changes, you have cycle changes. You just have a ton going on in the month. And this is when funds are taking profits. There's just, so many things going on that just say we're due for a sell-off. The fact that we've had a run without a real big pullback since, say February or May, is just, you had all of these things lining up. And you can see, the last time we tested the bottom of this channel was back in August. And then again, actually this is the daily. So, it always wanted to test the bottom of this channel. So when it broke out, it had this big run where it was so above the bottom part of the channel, and then actually broke through the top through earnings. It eventually wanted to come back. And then, so this is just kind of a consolidation, and you could draw trend lines on it, but everything was telling me that this was due for a seasonal sell-off. It was due for some rotation. But this isn't the only charting I use. So I also use TradingView, and this is kind of my setup on TradingView. Just ignore these numbers. This is something I'm testing. But I had drawn my Fibonacci retracement after we started getting the break of the uptrend and started a downtrend. I drew my Fibonacci retracement to say, okay, where are some of my points if we start selling off where I want to sell? If I'm going to buy puts, I want to know what numbers I want to sell some into. So when we hit these numbers, I want to sell. So I started drawing support lines. So I drew a line here at 1922, 1957, and then if you come down here, I drew a line at 1876. So this is the number I was looking for on Friday. I said, if we pop, I expect there to be some support on this trend, this previous trend. I expect it to bounce a little bit there, and then I expect more sell-off. And sure enough, in the morning, the stock had sold off. It bounced off this trend line, bounced it back up, and then continued to sell down. So I was looking to sell into 1876, and that's where I sold 90% of my options for the day. And so I had bought the puts on the pop once it started to roll over. Once the market and all the stocks started looking weak off the bounce, when they were bouncing into this previous resistance or previous support, now resistance lines, and they could not hold above them, that was my indicator that the market's going to continue to sell off more. So I put on some Amazon puts as it started breaking down. I added a few more. I was actually just put in a limit order, was able to get filled. And then I just held on to them with conviction because I expected it to test this. And if it looked weak and it's still holding the downtrend, I was going to hold it until it hit this 1876 number. Because if you go back through the chart, you can see where 1876 hit here. It almost tested here, but right through here, you can see all of this support in through here. So this told me, you have all of this support over here, and the fact that it touched, all of these times plus over here and bounced off, that told me this 1876 level is going to be strong support. So I needed to sell a majority of it into this, expecting a bounce or expecting it to potentially reverse here. And you could see later in the afternoon, it actually it bounced and started to curl off here. So what I'm looking for on Monday is if it breaks this 1876 number, I'm looking for my next line is going to be this 1853, which is another previous support line. And if that breaks, then I think we're going to go all the way to this blue line, which is the 100 MA at 1817. Now, I would actually be really, really surprised if we go this low, because not only would we be breaking the channel seriously, this long-term channel, it would be doing a ton of technical damage. But we would also be, on a major, major downtrend, on a major sell-off. The stock was at 2040, or no, it was at 2034, all the way down to 1820. That's a massive sell-off for this, especially when they have earnings at the end of the month. And it may happen. I'm not trying to be biased on it. I'm just trying to understand the stock and know the value of the stock and know how people love it. Let's see, you can't really see, but I have another MACD and I have a momentum indicator at the bottom of this chart too, which you can't see, but all of them are pointing down right now. So I am not going to be long or bullish this stock until all of those start to curl back up. And as you can see, all of my indicators here are curling down. So as of right now, if it can't hold this trend line and it can't hold this 1876, it's going to continue to sell off, and my next spot is going to be this one and then this one. So that's what I'm looking for on Monday is, are we going to rebound? Is the sell-off over? But I'm not going to base it all upon just the stock going up for one day. The stock may bounce back to this 1922 level just as kind of a breather on this downtrend, and then just continue down more. So we need to really break up to the upside with some major volume and break through some of these resistance levels in order for me to consider this as a long again. So for now, I'm bearish on Amazon, and it kind of goes the same way with a lot of the stocks. If you go through Google, as you can see, the MACD here is starting to cross over. The EMAs are pointing down. I have the 200 SMA is right here, which is honestly my next line of support. The 100 is here. This is the 200. Actually, I think this is the 150. Yeah, this is the 150. I don't use this one often, but I like to keep it on here just to see. I'm kind of testing to see if it does work, if stocks do bounce off it. But everything right now in this is pointing down, but it is holding this previous support line here at 1162. You can see where it bounced right off of that. So again, I'm going to be looking for reversals, and that's going to come from either the SPY and the Qs and the Dow on what's going to happen next week. So don't be biased. Don't think the sell-off is over. Right now, just kind of speed dating for the next 2 weeks until we get back into earnings. I think banks are the first to start reporting, and I think they start reporting on the 16th or 17th or something. and that's kind of the kickoff of earnings season. But most of the FANG stocks report at the end of the month. So I do expect these to get bought back up a little bit, especially if they sell off more. I do expect them to get bought back up a little bit into earnings. But overall, still kind of bearish on a lot of these stocks. We'll see if the SPY is going to test this channel. So far it's holding the 50 moving average. I do not expect it to drop down here. I mean, this would be not necessarily a flash crash, but this would be a huge sell-off if we got all the way down to the 100. I don't think it's done that in a long time. Not since June? I'm not even sure if the 100 was actually there in June. It might just be there now. The 100 might have been down here in June. But, I'm not looking for this February type move like we had, earlier in the year. I'm not expecting that to happen. But you have to be prepared in case it does. If you start seeing the market look really heavy and all your moving averages are converting down, everything's pointing down and nothing's bouncing, then that can happen. So, and a lot of it's going to depend on, that's kind of why it's important to understand the macro and the micro picture. You have to understand what's going on in the news, what's going on in the global economy. Everybody thought the market was going to reverse off the NAFTA deal, the fact that we were done with the end of the quarter, we were done with the end of the month, coming October 1st. And what happened? The market just sold off this week. In my opinion, it had nothing to do with some of the things that you hear either on CNBC or other things. I think it just strictly had to do with the cycle. I think it had to do with some rotation. I don't think it was because of, some microchip in Apple and Amazon. Sometimes I think the news feels like they need to talk about something every day, so they just pin whether the market goes up or goes down on whatever the news is for the day, even though a lot of the times I think it has absolutely nothing to do with why the market actually did what it did. Sometimes I think they overthink it, and it's actually a lot more basic than what they say it is. But that's kind of how I did my trade. So, just kind of in a review, get good at your charting, get good at drawing lines, get good at drawing uptrends, downtrends, support lines, channels, understanding your EMAs, and then building a thesis when it comes to your trading plan. And if your thesis is wrong or you don't have enough to build a thesis, the less things you can put in your thesis, the weaker it is. But the more you can build, the more conviction you can have. And that was why I had so much conviction on Amazon today and even yesterday. Is because the bounce yesterday, if you look at the intraday, and I trade off the 10-minute chart, there's no one way to trade. That's the great thing about trading. It's whatever works for you. I know so many traders that do it so different. There's traders that use the 1-minute chart, the 3-minute chart, the 5-minute chart, the 10-minute chart. I like to use the 10-minute, the hourly, and the daily. Those, to me, tell me the most. But to me, when I'm looking at a stock on the 10-minute chart, if it's below this yellow line, which is the 50 EMA, that tells me the stock is bearish. If it's above it, it's bullish. But then I rely on the other EMAs to kind of tell me what the day pattern is. And you can see on Amazon on Thursday, it never crossed over my 8 EMA. It was below it pretty much the entire day. So until it actually crosses over and that 8 EMA crosses over here or it breaks a downtrend, that is my indicator that it's time to get out of the stock. Otherwise, I'm holding on to the trade. So what I did was, going into Friday, I drew this line, the support line, based on yesterday's price action. And you always want to use the previous day as your closest support and resistance, because that's the most recent, because that's when you had the most buying and selling going on. So I always look at the previous day, then I'll look at the hourly and the daily chart. I'll start going back from there. So I drew this line. So I was looking for based on when the market popped, when the numbers came out, I was like, okay, I'm expecting a pop out of the gate. Now let's see if it can hold. And what I wanted to see was it to break above this this resistance line. I wanted to see if it could break above here this previous day, and then also I wanted to see if it could break above here, because look at all of the, look at all the rotation right in here, all of these candles. So this is going to be strong resistance. So it would need to break above here and hold. And what happened? It just went right into it and sold right off. So to me, that was saying weak. So once that started happening and it couldn't break out, and you could just tell right away, that's when I started putting on all my puts. And I was just playing the lottos for Friday. I think I bought the 1900s. So I started putting on a bunch of puts, just thinking, okay, this pop isn't going to last. It's going to sell off. And then sure enough, it started to sell off. This little pop, I was starting to get a little worried. I was like, okay, it's still holding the support line, but I was watching the SPY along with it, and the SPY just kept selling off. So I'm like, okay, well, if the SPY is selling off, this is not going to last. Amazon is not going to bounce on its own against the rest of the market unless it's earnings or some major news came out on it. And, none of that happened on Friday. So I was like, okay, this thing, just be patient, let it go. It's going to sell off. And sure enough, it just kept selling off. So what did I say earlier? I was looking for, let me pull it back up. I was looking for this 1876 number. That's what I wanted for my sell. I didn't care where it went after that. That was my number I had in my head. So once it got to 1876, which is right here, I sold 90% of it and I let the rest ride. So I let 10% of my puts go until it got back up and you could start to see it reversing. So once it started to break the downtrend and it crossed over right here, it crossed over my 8 EMA, that's when I sold the rest of them. So I waited for confirmation of the downtrend break. I wanted to maximize this as much as I can. So by selling out 90% of it, now there's zero emotion in the trade. I'm just playing with house money and just to see how much I can get. So once the trend broke, that's when I sold the rest. And then I was done for the day. Didn't even need to look at anything else. That was my home run for the market. So I hope that helps. Hope gives you a few more things to think about when you're trading throughout the day and when you're doing your pre-market or post-market plans. If you have any questions, let me know. Please reach out to me either on Twitter or you can leave a comment here on the YouTube. But if you like, please click the like button and subscribe and share with others. And please let me know if there's any other videos I can do to help. But understand charting, get good at charting, draw your support and resistance line, have a plan, build a thesis, and I guarantee you'll start trading better. So talk to you soon.